Hey everyone, welcome to my channel. I hope to give you some good information today. I'm going to give you my 7 best stocks that I'm currently investing in. And I'm thinking of these as a longer term investment. Again, I'm an active trader on the one hand, but if I find a good stock, I generally stick with it. So today I'm going to give you these 7 stocks in reverse order, a countdown of sorts from number 7 to number 1. And you're going to find that I've been very selective in this market. This market is very difficult to trade. And so I'm dedicating a part of my portfolio to these 7 stocks. I have a lot of stocks that are just collecting interest. Right now, the 10-year bond is almost 4%. It's 3.99. And on a short-term investment, a money market is where I put most of it. I get like 4.6%. And I want to put it in money markets because I want access to the cash for when the market turns, as it eventually will turn, either because something breaks and things get cheap, and when things crash and go down. I don't think it's going to be a dramatic crash. I think it's a slow grind down if that happens. But I think we have a phenomenon with the stock market right now that is like the 1980s. And I think what we're seeing is that the market, to some extent, can outrun inflation. And let me tell you what I mean by that. When news comes out that we have a hot number, like a lot of people employed, that's bad for the Fed because they will raise interest rates more. But on the other hand, it's good for the economy. And right now, it's vital that the economy do good in spite of these interest rate increases. In fact, it's impressive that the economy is doing as well as it has been doing with all these rate increases. So in this sort of environment, which is similar to the 1980s, what happens is the market has fits and starts, but it continues to struggle upwards. And I think that's what's going to happen. But I think it's going to especially happen if you're in the right stocks. And so today I want to give you my 7 best stocks, a low price to earnings and a high earnings growth rate. And I think you're going to like it, because I think it's going to be profitable. I've been in it for several days now. I've bought a fair amount of each of these stocks, and I'm going to hang with them. We have at least until March 22nd, when he's going to raise interest rates again. The Federal Reserve will raise interest rates. Jerome Powell will raise them. And there's a 73% chance, as I film this, that they're going to raise by a quarter of a point. And that's what I expect. Because I think they're just raising a quarter of a point till they get the mythical perfect interest rates. He's been burned before by raising it too far, too fast in the past. And so I think he's going to take a cautious approach and just do a quarter of a point for now. But before we go to my list of 7 stocks, hang on. This is not financial nor professional advice. This video is for entertainment only. Number 7 on the list is Direct Digital. Its symbol is DRCT. It has an earnings growth rate of 48%, and its price to earnings is only 10. So this is a very good buy. Its price right now is about $4.28. Its value is considered to be about $6.23. So it looks like it has at least a 50% upside and they're predicting that its earnings growth rate for future years, for the next 3 years, will average about 50%. Okay, so this is a growing digital advertising platform, and they present on all kinds of digital platforms. And I think it's a very good buy. And it's a cheap stock. It's the cheapest stock of the 7 that I'm going to present today. Direct Digital, DRCT, is only about a $14 million company. So it's the most speculative of the 7 companies, which is why it's ranked at number 7. But you can see that it hit a high back around in April. This is the 1-year chart. The red line is the 50-day moving average, and at the bottom is the relative strength. It's above the 50-day moving average, but it's come down after hitting $5.75 to where it's like $4.22 thereabouts. And so it's run up and it's come down, and I think now might be a good time to buy it. Its relative strength is about 42, which indicates that it's neither overbought nor oversold. It's probably a little bit underbought now, because it hit that peak at 575 and has come down with the market recently coming down. But I think with this stock, the way I would trade it, if I was to buy more shares, I would wait for it to go up a little bit. I want to see it move up to $4.30. So this is a case where I'm not trying to hit the absolute bottom. Would be trying to make sure that it's not going to keep moving down. We might get some downward movement, but the price to earnings is good, and that's a forward price to earnings of 10, and its earnings growth rate is outstanding, and it's a small stock. But it is more speculative, so I've put less money in this one than I've put into the other 6. Number 6 on the list is a favorite of mine. It's Canadian Solar. Its symbol is CSIQ. And putting solar panels on my house has been one of the better decisions that I've made. I have friends who use a lot of energy, and their energy bill ends up being close. It's almost like another house payment, so it's really outrageous, the prices we're paying for energy nowadays. And I think I put panels up in 2018 and in 2021 when I bought an electric vehicle. And it's easily been one of the best economic decisions I've made. Of course, you have to live in the right places. You want to be in the southern or southwestern or southeastern part of the country, at least someplace that gets a lot of sun. I wouldn't want to, shovel snow off the panels. Yeah, I wouldn't recommend it for places that get heavy snowfall. But it's been a good decision. CSIQ, Canadian Solar, has an earnings growth rate of 27%, and its price to earnings is low. It's only 10%. I mean, I'm not 10%, just 10. Its price to earnings is 10. Its value is about 51, but its price is only about 41. So it's undervalued with a high earnings growth rate and a low price to earnings. Do the country and yourself a favor and get solar panels if you can, if you're in the right part of the country. And looking at the chart, you can see that it's above its 50-day average, and its relative strength is at 59, which is pretty good. So this is a stock that, as you look at the 1-year chart, it's been as low as close to 20. Okay, so it's doubled from that low, and it's been fighting the downward trend. I mean, the last year has been a bear market, and it's rode it out pretty well. And so I think it's come into its own simply because I think there's a growing demand for solar panels. And I think we got a good fundamental case here, and it does have pretty good relative strength, and I just believe in the stock. And so I'm a little bit biased on this one just because I love the area, but I think it's a good buy, and for me it's a long-term hold. Number 5 on my countdown list is Sigma Lithium. Its symbol is SGML, and they mine lithium. And there's been rumors that Tesla was interested in buying it, which has caused the price to spike upwards. But in any case, we need lots of lithium, and this is a major company with good statistics. Their earnings growth rate is 46%, and their price to earnings is only about 6. Its value is about $57, and it's currently selling for about $35. So this is a buy. It tends to fluctuate a lot, and this is one for a longer term, and you want to be patient with it because you will get those fluctuations. If you can get it for less than 38, I would say it's definitely a strong buy. And as we look at the chart on SGML, we can see that it's the 1-year chart, and 2022 was a disaster in the stock market. Look how well this stock has rode out that vicious bear market. It's above its 50-day moving average, which is a good sign, and it has a strong relative strength indicator of about 64. This is a stock that you want to be patient with it, and it took patience in the latter part of 2022 to stick with it, but I think we know that the future is electric, so this is an investment in the future. Number 4 on the list is NSIT Enterprises. Its symbol is NSIT, and it has a earnings growth rate of 19%, and its price to earnings is about 14. That's the forward price to earnings. Its value is about $147, and its price is around $135. And as we look at the 1-year chart on NSIT Enterprises, NSIT, what can we say but up, up, and away? It's a strong stock. Its relative strength is about 82, so it's done very well. And particularly when you consider what a disaster 2022 was, and to have a chart like this, you're in good stead with this stock. It's well above its 50-day average, as can be seen on the chart. Number 3 on the list is a favorite of mine. I've followed it for years. It's Encore Wire. Its symbol is WIRE, and they manufacture copper wiring for the interior of buildings, and they do all types of buildings, commercial and residential. Wall Street loves this stock, and I think part of it is that the price of copper has come down, which has increased their profit margin. As we look at the 1-year chart of Encore Wire, we can see that it's come to life since about November of last year. It's well above its 50-day moving average, and it has a good relative strength of 73. Wire has an earnings growth rate of 19 and a price to earnings of 11. Its value is about 218, and its price right now is around 195. Number 2 on the list is ST Microelectronics. Its symbol is STM, and they make analog, digital, and automotive semiconductors. So they're basically a semiconductor manufacturer for commodities and cars. Looking at the one-year chart on STM, you can see that it started to catch fire around the end of January of this year, and it's gone up well above its 50-day moving average. Its relative strength is a decent 60. So I like the practical semiconductor basis of this stock. I think it's going to be in demand and has been in demand a lot. And I think this is one that you can put in a portfolio and not worry about it very much. STM has an earnings growth rate of 27% and a price to earnings of about 13. Its value is around $61 and its price is around $49. And number 1 on the list is none other than Super Microcomputer. Okay, its symbol is SCMI, and it lives up to its name. They're a computer maker that makes all types of computer equipment, but they especially make a lot of servers, it looks like to me. But this has been a super investment, and it's continuing on in its trajectory upwards towards the stars. SMCI has been a real rocket, and I am glad it's in my portfolio. It's going at least to the moon. It might be going to Saturn or to the nearest star system. As we look at the chart, this is the way you want a chart to look during a vicious bear market where you have higher lows and higher highs. So it's been a very good and excellent performer. And its relative strength is 66, which is decent. And I think this stock has more to run. Super Microcomputer has a wonderful earnings growth rate of 41%, but its price to earnings is only 10. Its price right now is around $102. Its value is around $133. Wow. So you can see why this tops my list. And please hit the like button if any of this has been helpful. I think we have a good set of stocks here. I think there's 7 excellent stocks here for the current environment, and I've been very cautious in selecting them and have truly tried to find the best. Thank you for watching. Smash the like button, subscribe if you haven't already done that, and I will see you in the future.